What did you think of the 60 Minutes piece with one of our local insurance?
Yeah, really unfortunate, hit job. It was really kind of a one-sided piece, and there's, now back-end litigation to it. And so I think that when you're talking, state of a hurricane, right, hundreds of thousands of claims, you can always find a bad couple, right? And so, but when you really think about that 99% go well, that's operating about as well as an environment can.
United Way Suncoast is dedicated to creating a better tomorrow for communities of Tampa Bay by investing in services and programs that help people live the lives they imagine for themselves. They believe the best way to help their neighbors is to join them in the neighborhood, which is why their week of caring never fails to inspire. Join the United Way the week of April 27th as they again celebrate the collective efforts of nonprofits and volunteers working to strengthen the community. Learn more by visiting volunteersuncoast.org/week of caring. And remember, united we rise, united we win.
Welcome to Money Market, a Bank of Tampa podcast. We highlight the businesses, expert business advice, the local economy, points of interest in the Tampa Bay market. Follow us on YouTube, Spotify, Apple, or wherever you find your favorite podcast. And make sure you share this episode with a friend or colleague. I am your host, Owen LaFave, the Pinellas County Market President for the Bank of Tampa, Tampa Bay's oldest and largest community bank. Well, there's nothing more sexy than insurance. And so, whoa, baby. So we've got a good one for you today. It is important, and I think in many parts of the nation, especially in Florida, we are dealing with an insurance crisis. Today's guest is going to lay it all out for us. Jake Holehouse is the president of Holehouse Insurance in St. Petersburg. He founded HH Insurance with his father, Ron Holehouse, in June of 2018, and Holehouse Insurance has been on a rocket ship trajectory of growth really ever since. So, Jake, thanks for joining us on Money Market.
Absolutely. Thanks for having me.
So are we in a state of crisis? Am I overstating it?
I would say from 2020 to 2024, we've been in a property insurance state of crisis, and not just property, but also auto insurance. If you've looked at your auto insurance rates, they've probably doubled or tripled.
Yes.
Homeowners rates have gone up.
So I have 4 teens.
Yeah.
And you would know, but so I would tell you, like, when I got the bill, I'm like, there had to be a mistake. And the person on the other end of the phone was like, it's got to be a mistake. No.
And then homeowners insurance, probably 50 to 150% year over year increases, every year for 4 years. With that being said, in December 2022, the Florida legislature passed what we would really call the most comprehensive legislative changes to the Florida homeowners market. Mm-hmm. And when that was passed, they said 18 to 24 months before we start to see an impact.
Okay.
And
so
here we are, and now we're seeing the impact. What we're seeing initially on commercial property insurance is we're seeing many renewals come down about 20%.
Are they really?
Yeah.
Wow, that's
Condo
incredible.
associations we're seeing come down about 20 to 40% on their property portion. And really the commercial market's kind of like the leading indicator. And so commercial goes up first and it comes down first. Homeowners, because of the regulatory environment to it, does lag behind commercial a little bit.
Okay.
But what we're seeing is homeowners rates are actually falling about 5 to 7% depending on the carrier, or at least staying even. The hard part with that statement is if you go look at your bill, it's probably not going to go down 5 to 7%
right.
because you have inflation on your policy.
Okay.
So every year your cost of construction goes up, let's say 3 to 4%, your roof is a year older and your house is a year older. And so you really need a -7 to be even. But I think the days of 50 to 100% rate increases, even after Hurricane Helene and Hurricane Milton locally hit us, we're still going to see rate decreases or at least stabilization in today's marketplace.
Well, that's encouraging news. And it is interesting, even though that inflation has slowed down. I mean, one of the areas that it really hasn't, I think, pulled back as much as people hoped is construction materials and in labor. So that would make sense that if premiums are decreasing, but also, the cost to rebuild is increasing, it's kind of leveling out, and we're not seeing it in bills yet.
Yeah, I think what you're seeing is it's at least normal, and it's at least an expectation, right? We all expect things to go up 3 to 5% a year.
Yep.
What we don't expect is 50 to 100, and that's where the insurance marketplace has been. And that's really the level out that has happened. I think if a consumer is hoping for a 50% rate decrease to go back to 2020 rates, the only way that would happen is if their cost of construction comes back down to 2020.
Right.
But purely from a rate making standpoint, we're in really the best spot that we've been in since 2019.
So you're really encouraged by the legislation. I mean, do you feel it went far enough?
Yeah, I think there's always more to be done. There's a couple carriers that would like to see, other things added to the legislation. But I think when you really think about it from a consumer standpoint, the Florida legislature and the Florida CFO's office and Office of Insurance Regulation did a really good job of, in that bill, it didn't just, look at one-way attorney's fees. It also changed the way claims have to be settled. It changed how fast carriers have to respond. And so I think the consumer got protected, but also the carriers kind of leveled that legal playing field to really allow for the rate stabilization that we're seeing today. Interesting.
So you say it was, because one of the criticisms that I've heard is that it's limited the amount of legislation, which, of course, I mean, that's probably a big portion of why premiums are decreasing. But then is the unintended consequences the consumers don't have as much ability to then seek litigation against carriers?
I think for true bad claims, that you still have bad faith statutes, right? So carriers still have penalties on there. I think really the issue is when you had 8% of the claims and 80% of the litigation, and that's where Florida was prior to the reform. The pendulum had swung too far. I think now the pendulum is kind of really back to the middle, and so I don't think that we necessarily need to do a lot more from a litigation standpoint. And I do still think that for true negligence by a carrier, there are still bad faith policyholder protections in the policy or in the litigation system.
That's good. And without calling any insurers out in particular, I mean, what did you think of the 60 Minutes piece with one of our local insurance?
Yeah, really unfortunate, hit job. It was really kind of a one-sided piece, and there's, now back-end litigation to it. And so I think that, when you're talking, state of a hurricane, right? Hundreds of thousands of claims, you can always find a bad couple, right? And so, but when you really think about that 99% go well, that's operating about as well as an environment can.
Okay, that's fair enough. So if you were insurance czar for the day, what would you do in terms of reforms? Would you do anything differently?
Yeah, I think we've really hit most of those reforms that needed to be that needed to happen on there. I think to the consumer, the hard part right now is when am I going to see rates come down? And the hard part there is, with construction inflation, if you think about it, right, go back to 2019, you could put a really nice kitchen in a house for $25,000. Yeah. Today it's 65 to 70, right? And so when you multiply that across 100,000 claims, that's a really big number that the carrier now has to, basically increase rates to keep up with inflation. Second factor of that is how is your policy rated, right? So you basically, if we're talking, commercial property, it's mostly on building coverage. If we're talking homeowners, it's mostly on, dwelling coverage. And if that cost of construction is doubled, you have to double your limits. Well, when we double our limits, that doubles the rate, right?
Yeah.
And then this third factor out there, and this is the one thing, if the state wanted to decrease rates, is really reinsurance. And so think of that as insurance for an insurance company. So if we go to 2022, that's pre-Hurricane Ian, right? And the Fed is paying, 0.9% on the 10-year treasury. Right. And so if I come to you and say, hey, Owen, if I borrow 6 months of capital in what's called a catastrophe bond, and Florida doesn't get hit with a hurricane, I'll give you 7% of a rate of return. So short term, 7%, getting 0.9 in the bond market.
Great.
It's a great deal, right? Yeah. Well, then you have Hurricane Ian. So now you didn't get paid back and you lost your money. Yeah. And now we go to 2023 and 2024 and the Fed is 5 to 6%. 7% is now, I'm not going to take that risk, right? I want 15 to 25%. I've got to make sure that I hit my return profile. And so then as a result of that, that's that kind of hidden rate increase that happens in there. Florida has mitigated that a little bit with what they call the CAT fund, which is basically like a state subsidized reinsurance layer in the policy. If we really wanted to see consumer rate decreases, we could decrease our rates within the CAT fund. But now you take on a whole new set of issues as to, what can that do to the state's balance sheet when a hurricane does come? And so I think from how do we find the middle ground without, really having too much what I'd call government manipulation and interference of rates is I think we're really there.
That's interesting. So, but in spite of that, so what I'm hearing from you is that, we're going to have additional cost increases related to the reinsurance, but yet the commercial rates are still coming down by 20 I mean, that's,
so I would say, overall global market is really, we've gone from a hardening time period to a softening. As interest rates are expected to come down, that means the rate of return requirement comes down as well. And so I think that's really where I would say, like, if we wanted to decrease rates, that's where we could do it. But I think overall, we're at a pretty good, middle ground right now.
okay. Well, we just had 2 hurricanes.
Yeah.
And so maybe it's a little too soon to really understand the fallout and the change in underwriting practices. But I mean, have you seen any? Do you anticipate anything coming as a result of that?
Yeah, great question. And I think, when we think of Hurricane Helene, that's really a flood event, right? And so flood is, for the most part, the National Flood Insurance Program. So that's not really going to impact the homeowners market outside of Perry, Florida, right? When you go up into North Carolina, where did a lot of that damage come from? It was all flood.
Yeah.
So really Milton would be the one to affect the, property markets.
Okay.
And what we saw in Milton is that it really performed at expectation. And so when you think about it, and that's been a big question that we've had in our office, has been, I can't imagine what my rate's going to be next year, right? I've had 4 years of increases, and now we had a big hurricane. I mean, what's going to happen to me? And even with Milton, we're going to see decreases.
That's incredible. That's
right. And I think the reality of it is you can't be a Florida insurance company and not expect a hurricane, right? And so it's really an event that hit at expectation, but then you're seeing the reforms also work in that event. And so you kind of add both of those together, and now the reinsurance markets see Florida as, we don't love it yet, but we're kind of cautiously optimistic as to the future when you think about where reinsurance rates can go on there.
Jake, you're making me feel a lot better than I did before this conversation. But you're right. I mean, you can literally drive around town or drive along the beaches and say, okay, that damage was Hurricane Helene and that was Milton.
Yeah.
I mean, it's very different in terms of the impact.
2 totally different storms. And I think the other thing that Milton really showed us is that the Florida building code works, right? So when you think about it, prior to 2002, each county had their own building code. And so in most coastal counties, that's like mid-1970s that they did it. In Central Florida, like 1990s. Mm-hmm. But in 2002, the state did a statewide building code that everything has to meet this certain standard. And when you think about a shingle roof lasts 15 to 20 years. So that means, hypothetically speaking, 22 years later, every shingle roof should now meet Florida building code. And tile roofs, let's just call it a 30 to 40 year roof, and metal about the same, that most tile and metal now meet Florida building code. And so what we're seeing is that, if you had Milton come in 2004, like that 04-05 hurricane season, prior to those building code reforms going into place, probably a significantly worse event. But now with building code starting to work and the area that Milton hit, right? I mean, it really went, Anna Maria, Lakewood Ranch, Ruskin, Apollo Beach. A lot of that area has been developed post 2002. And so a lot of the results that we saw were that the building code worked. And I think it's really that, we can resiliently build in Florida and protect a lot of damage.
To me, that was really evident in touring the aftermath of Ian down in Fort Myers, because you had a lot of those old kind of like 1970s neighborhoods, and then you have newer communities too. And you could literally drive through and say like, oh, okay, well that was pre-2002. And to your point, they sustained, I mean, the building code works.
Yeah, absolutely. You're missing a couple shingles instead of the roof being blown off.
Right. Do you think there's enough focus in Incentivize for building to, today's standards?
Yeah, I think to talk about, Helene as an example, I think that's going to be a really painful event for a lot of like the slab on grade type homeowners. And I don't think there's enough incentive from a state standpoint right now to get somebody to elevate. And
that's a couple $100,000.
It is.
Yes.
And so
in a lot of cases, it just doesn't make sense.
Yeah. And so, and the challenge is in a flood policy, in that NFIP, if we're talking homeowners, you only have $250,000.
That's the National Flood Insurance Policy.
Correct. So NFIP is National Flood Insurance, which is, regulated by FEMA. And so it's the federal government program. The maximum amount of coverage that they'll issue is $250,000.
Which I want to touch on that. So, I mean, that's crazy because they set that in the 90s, right?
Exactly.
So, I mean, in your opinion, do you think that needs to be increased?
I think it would make areas significantly more resilient and able to recover from storms. Now, And so I think that that's a really big challenge for a lot of these homeowners that are in a slab on grade house is, oh my gosh, I don't have $800,000 to do a rebuild. I only have $250,000 of insurance coverage. What do I do?
Right.
And that's I think that the decision that certain neighborhoods around Tampa Bay are making right now that were predominantly, slab on grade, low lying type areas.
And because if it was a flood event, the homeowner's insurance doesn't cover that balance.
That's correct. So homeowners only covers wind, and when you're talking Helene, the wind was 160 miles offshore. So that's really purely a flood event. One other that's really hasn't been talked about that really worries me from a flood standpoint on homeowners and businesses is there's no loss of use or loss of income coverage on a flood policy. So if you're a restaurant and you flooded and you're in Treasure Island and the city hasn't issued your permits yet, you've been closed since September 26th. Yeah. You still have your continuing costs and you have zero money coming from your flood policy to be able to pay for that lost income. For a homeowner, it's I have to go move somewhere else for 6 months. I don't have a house for 6 months, and now I've got continuing cost at both properties. You have zero flood insurance coverage from the National Flood Insurance Program to cover that additional cost, and that's a really big resiliency challenge when we think about certain areas of Tampa Bay.
Sure it is, and devastating in many of those instances, and I forget what the industry standards were. I did see this, but so to throw a percentage on it, I can't do it. But most of those small businesses that you referred to that are closed don't reopen. It's something like 80%. So you think of if you drive along the beaches, and those restaurants that are closed are probably not going to come back.
Yeah, it's very sad to see. And there's and I think the challenge for a lot of those business owners is it's not like there's a policy you can buy for it, right? Yeah. And I think that's where now the good news on the elevated structures, they're reopened, right? They're at least open. Now they might not have as many customers as they once did, but they can at least open 24 to 48 hours post-storm. It's those slab on grade, ground floor businesses that are very impacted.
Yeah. You have mentioned that 25% of the flood claims are actually outside of the flood zone.
Yeah.
What do you recommend to those people? Because Helene was a perfect example of it, that we saw areas that you never associated with flooding. You never think in a million years that they would flood, but yet here we were. What do you recommend to homeowners that are outside of that area?
Yeah, I think the biggest challenge that we see as an agency is that most people live in a psychology that it's not going to happen to me. Right.
Yeah,
and
never me.
Yeah. Right. Yeah. And I think Debbie in Sarasota was the perfect example of that. Right. You had areas of Lakewood Ranch, which are 30 and 40 miles from saltwater, get flooded due to infrastructure failures. Well, if that stormwater system doesn't work and water comes from the street into your house, that's a flood claim. And so that's not covered in your homeowner's policy. And so there's certain pockets of areas where we had local government infrastructure failures. Some point the finger and blame that, Florida has outgrown its infrastructure in certain areas and that we need more investment there.
There's probably something to that.
Right. And so that, can drive flood losses. And unless you have that separate flood policy on there, there's not coverage for that in your policy.
It's, and interesting enough, that was the threat that we faced at our own personal home because we're in a canal. And so we're so focused on the water rising behind. At some point around midnight, Hurricane Helene had a neighbor call and say, like, you need to move your cars. The streets are flooded. And so that's, the stormwater had nowhere to go. It was coming up. It came up to her garage. Thankfully, it didn't come in the house. But I know a lot of other people, just weren't lucky. So do you recommend folks in non-flood areas to carry flood insurance?
Yeah. I think that it's such a small cost compared to the risk on there. That
is it relatively cheap if you're not in a flood zone?
Yeah. Typically I'm going to say between $350 and $1,000 a year.
Okay.
One of the biggest kickbacks that we have on that is that if somebody has a mortgage, their lender won't escrow their non-required flood. And so
interesting.
Right. Okay. And so for a lot of Tampa Bay homeowners, specifically, let's call it a $300,000 house, right? Coming up with the $1,000 a year can sometimes be a challenge. But if my lender just collects it, it's doable.
You don't think about it. Right.
One thing the NFIP did, and it is starting this year, is now the NFIP allows monthly payments. So previously it was that flood has to be a pay in full every year.
Right.
With monthly payments, I'm optimistic that more people will want to carry X zone flood because now it's more affordable to do so.
Well, and I guess, if more people are paying into the system, it probably would come down for everybody as well.
Hopefully.
Yeah. In theory. Anyway.
Yeah, exactly.
So I think there's maybe 10 private flood insurers in Florida, if my numbers are right.
Yeah, give or take.
How do we encourage more to come to Florida?
So, private flood is a real challenge. And I say that because those who need the coverage the most can't get it from the private market. And those who the private market wants to write the most don't want to buy the coverage. And so I think what we see is that like the slab on grade, let's just take your typical shore acre slab on grade. It's maybe flooded 3 times now.
Yeah.
There's not a private market that wants to come write that.
Right.
The private markets more want the elevated on enclosure, the house on stilts and things along those lines. And prior to 2021, it was very hard to compete with FEMA's rates. With FEMA did what's called Risk Rating 2.0 on October 1st, 2021. And what it does is it really drives up the rates for like a new construction house. And so it used to be that here's your flood zone. So let's just say you're an AE flood zone and you're a +2 elevation. It doesn't matter if you're in Key West, Tierra Verde, or Orlando, the rate's going to be within about $50.
Okay.
And in Risk Rating 2.0, the design of that was that basically we're going to rate it on location, value, and elevation. The challenge that we're seeing on there is that many of the new constructions are larger homes, so they go way up in value, even though the coverage is still capped at $250,000. If you build a brand new house on Clearwater Beach and it's 4,000 square feet, your flood insurance rate with FEMA is probably about $10,000 for the year. Crazy, right? And because the slab on grade house next door that's 1,500 square feet, their rate is cheaper.
Yeah.
Doesn't make any sense, but that is what they do. And with that being said, that's where the private market really competes, because the private market will come in and say, hey, we'll write this for $3,000. And so I think as more things are developed, you're going to see more private market. And as the NFIP continues to raise rates, you'll see the private market saying, we couldn't compete at 600, but we can definitely compete at 10,000.
Well, and that's some of the criticism for the FEMA rates is that the 2.0 didn't go far enough, right? It's not.
Yeah.
Is that an incremental thing that they're increasing over time?
So if you've had your NFIP policy prior to 2021, your rates are going to go up 18% per year. Now, the challenge is if you started at 600 and you're going to 10,000, 18% might take like 20 years to get there.
Right.
But eventually you will continue to go up.
Okay. So what are your top recommendations for homeowners in policies? I mean, I think what we've seen actually, and I've had multiple examples of people telling me, is that their brokers, of course, not at Holehouse, but came up with strategies for them to save. And now as a result of, the 2 hurricanes, they found out they weren't properly insured and are dealing with unintended consequences of that saving. So, I mean, what's your recommendations?
Yeah, that's a great question. And I think there's a couple things. So one would be if your house is an older house and you want to drive the rates down, watch for the state to reinstate that My Safe Florida Home program. And that's where the state will match you 2 to 1 to do things like hurricane clips in your roof, hurricane shutters, hurricane impact glass. And those can really drive rates down. So when you think about a premium in Florida, let's just take a 1925 bungalow in Hyde Park area, right? That is probably a $10,000 rate on average. And on that, you've got 2 sets of rates. You've got your non-hurricane and you've got your hurricane wind. The non-hurricane is probably about $2,000 for that rate. $8,000 is the hurricane wind. You can reduce that $8,000 by up to 88% with wind mitigation credits.
Oh, wow. Okay.
Now, just doing a basic re-roof is about a 15 to 18% credit on there. But adding hurricane clips now takes that to about a 50% rate credit. And adding hurricane clips and impact glass or hurricane shutters now is that 80-ish% rate credit. And so you can really start to control your cost by doing mitigation. The second is look at your deductibles, right? A lot of people, as rates went up, they started to cut back on those deductibles. Mm-hmm. Well, what caught a lot of people by surprise is that in Florida, we have 2 deductibles. So we have a deductible for non-hurricane, typically $2,500 or $5,000. And we have a deductible for hurricane wind that's typically between 2 and 10%. What many people thought is that's a percentage of my claim. What many people learned is that that's a percentage of my home's value.
Right.
So simple math is, $1 million value, 2%, 20,000. Some things are going to be covered, right? I kind of say you've got a 50% partner on your roof. 5%, 50,000, you're self-insuring your roof. Yeah. 10%, $100,000 deductible before you have insurance kick in, definitely gets up there. And so it really makes it almost like you're somewhat self-insuring on that first layer.
Are there insurance company or I guess wind insurers that will even finance at 2%?
Yeah, absolutely. So,
and I guess maybe affordable policies?
Specifically on the homeowner side, it's typically not that expensive.
Okay.
Commercial, definitely more. But on a homeowner's front, you're talking maybe a 5 to 10% difference of total policy cost.
Okay.
So I would say in an average rate profile, it's about a 50 to 100 year rate of return to go from the 2% to the 5%. Now, from, until this year in Tampa Bay, that made a lot of sense, right?
Right.
Now with Milton, that starts to not make as much sense. And
Sure.
So it's really just kind of a bet on the weather as to when you think you might need that policy.
Okay. Makes sense. What about for business owners? I mean, how does your advice differ?
Yeah, so I think for a business owner, it's pretty similar. And a business owner, typically the deductibles are higher. So many on the business owner side start at 10%, but you can come down to a 5% or depending on the carrier, down to a 2 or 3%. One of the things that we're seeing some customers go to is what's called a parametric insurance. And it's a pretty cool concept. And so think about all the things that aren't covered in your policy: your dock, your seawall, your landscaping, your food spoilage in many cases, right? Might be a $100,000 expense to your business. So you buy a policy and you say, if the wind hits hurricane force within 20 miles of this location, then I want to be paid. And it pays out not based on damage, but based on wind speed. So there's no adjuster, there's no damage requirement, and you can buy a $100,000 policy for $4,500 to $5,000, but now you have kind of that extra layer of protection on everything that's not covered. And so that's something that we're seeing some business owners go to add a layer of protection.
Okay, interesting. I didn't know about that. So I think what also came to the forefront is, we live on the water. There was a lot of damage to boats. Can you share a little bit about your thoughts on that particular segment of the industry?
Yeah, so boat insurance is really interesting. I would say that since Hurricane Ian in 2022, the marine market has really had a shift, right? If you think about the pictures of Fort Myers Beach, it was a lot of boats stacked up, right? And so what we've really seen post 2022 is most carriers instituting what's called a haul-out requirement, which basically is hurricane watcher warning or tropical storm watcher warning, depending on your policy language. You have to put your boat on a trailer, haul it out, and be able to get it to a safe location, as boats on lifts are typically where problems happen. And so, that's really, I would say, the biggest shift there. And, if a boat is over $350,000 in value, 8 out of 10 times it's going to have a haul out requirement. Okay. If it's under 350, you're still more in what we would call the standard market. And so typically you don't have to do a haul out. But we've definitely seen a lot of rate pressure on that marine space. And I think one of the big challenges that we've seen there is with the price increases of boats, most people can't go get a new boat for their couple-year-old boat because the price has gone up so much and their insured value is what they paid for it maybe in 2020. Now it's doubled in 2024, 2025. And so it's definitely an interesting segment in that way.
It is an issue. And firsthand, I saw my neighbor's boat float by our house. So thankfully it didn't hit any of the other boats. Amazingly enough, it was recovered. But I also have other examples of neighbors whose boats ended up in people's backyards and it was kind of ugly and messy.
Yeah, absolutely.
So you pretty much grew up in the insurance industry.
Yeah, they say it's like the mafia. Once the family's in, you can't get out. And,
Right.
and so grew up in the industry for my entire life.
Now, did you have a desire to do something different at some point?
It's interesting. So I went to Florida State. And I went in
Great risk program, right?
It's I think number 2 or 3 this year. So I went to Florida State and actually originally planned to major in entrepreneurship. And so that's where I started. And I went to St. Pete Collegiate, which is the high school at St. Pete College.
Okay.
So went into Florida State with 77 of the 120 bachelor's credits. So straight into the College of Business.
Good for you.
Yeah, thank you. And when I did that, I had to take an insurance course as like one of the prereqs for the College of Business. And I was like, wow, I know like 99% of this class. This is going to be the easiest major. And, maybe I could be an entrepreneur at insurance. And so really went in not thinking insurance and flipped in that first semester to, hey, let's think about insurance and entrepreneurship. And that's really where my career started.
Okay, because your dad had started an agency and sold it to Regions, right?
Correct.
Purchased it back.
So actually started it from scratch.
Okay.
And so, so my dad sold it in 2015. I stayed on for about a year and a half, and then went to the carrier side to Heritage and helped Heritage grow from Florida only writer to when I left we were writing in 12 states and about $500 million in annual revenue to about $1 billion in annual revenue, and in that process, saw a ton of kind of. Went to the back office of a lot of insurance agencies, met with a lot of agency principals, and I was like, wow, there's a great opportunity here. And so in 2018, I kind of quit the corporate job and said, hey, let's take the risk and started it from scratch. And so we started with 3 of us on day one. And now we're sitting at about 35 people and just continue to grow from there.
Wow. So, what is the growth trajectory? Where do you see it going?
Yeah, it's really for us, we see a huge gap in the marketplace and it continues to be disrupted. And so for us, we really look to, continue to grow, one customer at a time. And it's really, it's a referral based business based on doing great work. And so for us, it's really finding what we call the raving fan experience, going over and above at every opportunity and continuing to just let the machine grow from there.
Now, would you say that's your differentiator in the market?
I think it's really, customer service level and a knowledge and market level, right?
Okay.
And so there's a lot of independent agencies, but not all of them have all of the carriers. And so the carriers is really where the rates come from. But one of the other big things that does make us different is we look at the client's annual rate change and then automatically remarket it. I think that's the number one.
That's interesting. So you're proactive about it. Versus,
It's the number one complaint that we heard was, sure, I haven't heard from my agent in years and my rate just keeps going up and oh my gosh, I can't believe it. And so
kind of set it and forget it. Like,
correct.
Squeaky wheel.
Yeah. And so for us, we really take it as a, set it and review it instead of set it and renew it. And we really want to look at it annually and make sure that our clients are in the best rate program.
I love that approach. And I know our clients that we've referred over to you have appreciated just the responsiveness and the proactiveness of your company. So thank you.
We appreciate it.
So what do you think about the rise of like Insurtech and kind of the automation and AI side of things?
Yeah, I think it continues to make the industry better. I think that, when the word Insurtech came out, it was, let's get rid of the agent and we're going to write everything on a direct program and increase our margins. There's probably about 10 examples that did that. A couple of them publicly traded and their stock went from 40 to 120 down to 10. Right. And so I think what has really shifted in that is that Insurtech is great, but you still want that agency relationship and you still want that agency field underwriter. Our job as much as anything is to look and understand the risk and make sure we're placing the client to the right carrier. And when it's being bought just on a rate only, that doesn't really happen. And so I think what we see with Insurtech is that carriers get more sophisticated with pricing. You're getting getting more of like an individual risk rate. You know, one of the biggest complaints that you hear is, well, I'm a great driver. Why do I pay for everybody else? Right? Well, now you have the opportunity with telematics to get a custom rate just based on your driving profile. And so we're really seeing Insurtech do a lot to potentially reduce rates and just, you know, get the right rate for the customer that's designed to them instead of just, you know, here's your zip code, here's your rate.
And is that kind of the pathway to cheaper auto insurance? We've talked a lot about property insurance.
Yeah.
And I know we teased on auto insurance a little bit and how out of control that's gotten. But, I mean, what do you see the future of auto insurance looking like in Florida?
Yeah. So, you know, auto insurance is a I would call it a lagging indicator, right? And so if you look at the CPI report every month, auto insurance continues to lead the pack nationally. So it's not just a Florida issue. The issue with—
But it's mostly Miami and Florida. But anyway, go ahead.
Yeah, definitely you know, expensive rates down there. But, you know, the issue with auto insurance is you go to 2020 and every carrier dropped rates 20%, right? COVID, nobody's driving, Allstate started it, and then everybody felt like they had to follow and do 20% rate decreases. Yeah. So in 2023, just to get even, we had to have a 20% rate increase.
Okay. And
then people started driving a lot more and getting in more accidents. But then really what happened is vehicle price inflation, right? If you recall, you know, people were paying more for used cars than new cars just so that they could get the car. Mm-hmm. And parts, you couldn't get European parts, and rental car prices, right? Skyrocketed.
Through the roof, yeah.
Right? And so you compound all of that together and you have loss results go off the charts.
Okay.
So as inflation has slowed down over the past year or so, so have auto rates. So as an example, in Florida, Progressive, which is one of Florida's largest writers, they just took a 7% rate decrease. And so that's the average. Some will be more, some will be, you know, less, but you are seeing rate decreases start in the auto insurance front as well, mostly driven by just that normalization of loss results and basically what they're saying is, hey, we're now being paid enough. Inflation has slowed down. And so now we can start to reduce rates to try to grow again, where for the past couple of years, carriers have been in, how do I shrink my book, not how do I grow my book?
Right. Future of the insurance market in Florida. What's your prediction?
I think as long as the legislative changes hold, we are in a great spot. And we're always going to have expensive insurance, right? We live in a catastrophe-prone area.
We're surrounded by wire. Right?
Correct, right?
And hurricanes.
Until hurricanes go away, we're going to have expensive insurance. But what's really interesting right now is in Oklahoma, it is harder to get homeowners insurance than Florida.
Interesting.
They don't have hurricanes, right? Tornadoes and hail. So the door-knocking roofers have now moved to Oklahoma.
Okay.
And so now in Florida, where we have 2% wind deductibles, Oklahoma now has 5% mandatory wind deductibles in most of their areas. Wow. Minnesota is taking faster rate increases than Florida right now. And so Florida definitely led in terms of rates going up. The state reacted with very strong legislation. And now we're seeing Florida lead in rate decreases and the rest of the country go up. And so I think as long as that legislation holds, we're still going to have expensive insurance because of hurricanes. But I do think that we're seeing a flattening and a softening, and that as building code continues to take effect, continues to get stronger, and we as a state continue to get more resilient, we're going to be in a great spot. You know, just to give you an example, in Parrish, if you go buy a new construction house, let's just call it a $500,000 or $600,000 house, your homeowner's insurance rate's probably $600 to $800 a year.
Wow.
Right? And so amazing. It doesn't have to be expensive in Florida, but it is expensive in our older homes, our higher values, our, you know, waterfront homes and things like that. But I do think that really that east of 75 region, they're going to see rates drop 20 to 30% over the next couple of years. I think the coastal region will see it kind of stay rate neutral. And, you know, to somebody in like, you know, downtown St. Pete, they're probably going to see a 5 to 10% rate decrease. So I do think that the future is very bright from Florida's resiliency and insurance pricing.
Well, I'd said it before, but I'll say it again. You make me feel a lot more optimistic, Jake. Anything you want to leave or words of wisdom for our people listening?
No, I think, really, if you need any banking services, I'll testify that, Bank of Tampa has been an amazing partner for us and really, supported our growth.
Appreciate that.
And, just really appreciate the relationship with you guys.
No, it's mutual. So thank you. If people want to find you, Jake, where would you direct them to?
Yeah. So our website is hhinsgroup.com. And our phone number is 727-498-5551.
Awesome. Well, Jake, thanks for coming on Money Market.
Absolutely. Thanks for having me.
If you have a question or future show idea or would like to be a sponsor, you can send us a message at moneymarket@bankoftampa.com or find us on LinkedIn, X, Facebook, and Instagram at Bank of Tampa and online at bankoftampa.com. Thanks for tuning in. Thanks for subscribing, and we'll see you around in the Money Market.